And investors are facing a fresh dilemma in the markets amid incoming data. You can catch up on the latest in today's morning brief over at the Yahoo Finance homepage. For more on that, we bring in the author of that. That's Brian Sozzi. Soz, as we look at the outlook for the economy, which some people are saying it's going to tip into recession, and we're looking at earnings on the other hand, and earnings, they don't look so great. Yeah. So we're kind of like, the market's a little bit in drifty mode here.
And that's the dilemma. And this was really something highlighted by a friend of the show, friend of our network, Keith Lerner over at Truist. He's writing this in his latest market outlook. The recent action is very much aligned with a key market dilemma we have been highlighting. He goes on to say if the economy stays stronger, as we have seen recently, Fed policy is set to remain tighter, and this will weigh on market valuations. Of course, we've seen over the past month, as various Fed speakers have come out a little more hawkish than the market expected. Stocks do not like that. They will tend to trade down. Keith also brings this up. If the economy weakens, this will pressure corporate profits. To your point, Julie, neither of these are outcomes that are favorable for premium market valuations. And Jared, you're in the numbers guy here. You look at the valuation, forward price to earnings multiple on the S&P 500, 17.6 times above the 10-year average of 17.2 times, despite us being in the middle of a Fed tightening cycle.
Saz, what do you think happens with margins in the next earnings cycle here? Because there's been speculation that estimates should come down a lot more to meet what expected to be more compression in that area. And then there's other thoughts that we have a bifurcated market here, and you got some winners, you got some losers, and that's only going to expand over time. How do the averages look to you here?
Well, let me run my discounted cash flow analysis, Jared. No, but really, it's weird because we are in a dilemma from the standpoint of margins, because if you hop onto these earnings calls over the past few weeks, and you do get a sense of disinflation. Now, that is not deflation. That is just the rate of growth for many companies. They're seeing inflation start to come down. Fuel prices, various commodities, but levels are still high. And then you stack that up against with the cost of credit likely continuing to go higher for a lot of these companies. All of that is negative for net profit margins, which is further down the line item from gross margins and operating margins. Not to get all geeky on you on Monday morning. It's just how people think about it.
That's the way we like to keep it on Monday morning. Nice and geeky.
And every day for that matter.
Yes. So, Brian Sozzi, thank you for stopping by here.